Hey everybody, and welcome to Make HOAG Money. Jimmy Decker, I see you first in the room in the YouTube meeting. You win the prize this morning. Welcome to Make HOAG Money. You bring your trade ideas. We vote on them. We try and make money. The CFTC disclaimer: there's a lot of risk involved in futures trading. We all know that. Money that you can use for trading should be risk capital only, and risk capital to me is money that you can afford to lose. We are not making any suggestion that anybody buy or sell anything that we are doing today. These ideas are the ideas of our traders, and we're not suggesting that they are going to be successful or at a loss at any point in this presentation. This is for education only. There's no expectation for excellent performance here. We are just taking a look at the markets and trying to be good risk managers. The rules for Make HOAG Money are, of course, kindness and respect above everything. There's always differences of opinion in markets. That's what makes them so good. We're going to have a couple of people enabled to talk. I don't know who they're going to be just yet, but we're all going to be involved in the decisions. Going to be using the polling system on Zoom to vote for these trades. If you're on YouTube, you won't be able to vote, but you can always join us in our Zoom meetings. We're going to use the chat room to discuss trades in both YouTube and on Zoom. We're going to focus on the E-mini S&Ps for opportunities. We're not going to trade just to trade. I think we've fallen into a little bit of that because we're just trying to make HOAG Money exciting. We're not going to take losing trades, which we have already done plenty of that, and that's okay. Losing trades are part of trading, and your feedback on Make HOAG Money is, of course, vital to its continued growth and improvement. So let me know what you think about Make HOAG Money. You can always email me at jhoagland@topstep.com with your thoughts and ideas. I've already received a lot of good ideas. We're already talking about expanding Make HOAG Money, expanding Make HOAG Money for 2 more days. We're going to do it at a different time. So sometime the end of September, maybe the beginning of October now, we're going to add Monday and Wednesday from 2 to 3 for Make HOAG Money. So we're going to have the mornings and we're going to have afternoons. I'm going to see how that goes for a little while. And if it continues to expand, maybe we'll start to add other products and so on and so forth. So here we are. We're looking forward to what we've got going on. Of course, my brother is here and he wants to become a speaker. And if anybody else would like to, just let me know in the chat or raise your hand, of course. We're always looking for more participation here. We've got a lot of the usuals here. It's good to see you, Ben. How you feeling? Anne Marie is here. Always a pleasure to see Anne Marie. It's great to see everybody. Still not 100%, but trying to keep with routine. Good. I hope you feel better very soon. What's going on, my brother Rick?
Hey, good morning, everybody.
How you feeling?
Good.
Good.
Another day in paradise.
Well, we are in a day of paradise in the same day we were in, well, at least in the same range we were in yesterday.
Yeah. Probably play both sides, I'm thinking.
Right? Wait for the market to kind of get down to levels of rejection from yesterday, levels of rejection from Tuesday. Got our overnight high, which is relatively close to yesterday's high. It looks like we're going to be opening outside of the value area, which do we want to think about taking the opening range trade again if it's less than 5 points? Let's take a vote on that, and we'll see what everybody has to say.
Depends on where it opens.
Yeah, if it opens inside a range, Andre, long or short for the opening range trade is whichever side the opening range breaks out of first. Opening range is the first minute of the regular trading hour session, the way I look at it. You know, I'm thinking if we're going to be looking for opportunities to fade extremes from yesterday's range, I know somebody who is looking at the bottom of these candle bodies very closely this morning because they're lining up very nicely with the low from Tuesday, and we've been seeing rejection below those levels this morning. So already thinking that this might be a kind of a cool level for us to look for.
Yeah, pretty definitive support and resistance levels, so it's easier to limit your risk.
Yes. Yes. So 53% participation. We're looking at 67% saying yes to the opening range trade if it's five points or less. So we'll take a look at it. We're opening out of value, so I think there's perhaps a little bit greater idea for a higher probability of it because it looks like the market is opening out of value from yesterday. Now, if some folks thinking, it's probably going to be a short day. A lot of folks expecting some continuation to the downside. Here's what we're looking at on the daily chart in the S&P is this day has been an important day. It was a day that things changed a little bit. We've been back down to that level. We took back almost all the four of the up days when we were looking at the market saying, if there's no bad news, this thing could just continue to drive higher. And the CPI came out, and that was our bad news. We've been digesting ever since. We know that it's still rollover. It's still, we've got, quadruple witching tomorrow. We're still relatively range bound in the last, since the market kind of came down here. Looks like a really good dead cat bounce. So it wouldn't surprise me to see a little bit more downside momentum, but down towards weekly kickoff low offers us yet another opportunity.
Still got a negative channel, though, John, off those tops and
Up here?
trend line, yeah. Got it up too high.
It moves. See how it just came back down?
Yeah.
Now you've got this one here.
Mm-hmm.
So we'll pop that on.
And then slide it down, see what the bottoms look like. There's a channel there. Like a parallel. Yeah.
And there you go.
Yeah. Kind of lining up with those lows.
Yep. Well, yeah, we've got 1, 2, 3, 4 points of contact, as our friend Matt Hoyt would call them, frequencies. And the more frequencies, the stronger the level, right?
Yeah, touchy-feely, yep.
So, all right, we've got daily set up. Oops. Here's the E-mini. Of course, we're trading micros, but boy, we are at our overnight low or extended trading hour low here. So I'm really kind of interested to see if our opening range trade can play out for us today. We are 10 seconds from it. Here's the E-mini S&P first minute. We'll see if this gives us an opportunity.
The consensus is still bearish.
Mm-hmm. So,
as I said.
Yeah. 48. So we're at 4 points risk.
Hmm.
30 seconds to go. Okay, there's our 5 points. 975. 4 half. Okay, we've got our opening range. We've set up a stop to get long, 1 tick above it, and a stop to get short, 1 tick below it, whichever one gets in first. Because we've got our parameters here. We're within 5 points of risk. And it's just not really doing much of anything here, but we're still in the first minute. I always have to remind myself that we're in the market's time. And the market is, this is a hiccup in the market's time. Ben, did you want to speak? I just saw your comment here about before the opening range. If you want to chime in, I can let you. Ah, yeah, there you are. Gotcha. We're not in the opening range trade here just yet, so you got time.
Good morning.
Good morning, Ben.
Yeah, so I don't know if I was wanting to say this before like we actually got into it, but I just wanted to offer that when I learned the opening range trade, I learned it is called the opening range with a filter, and it generally meant that you only took it with a gap.
Mm-hmm.
But there's other ways to filter it. I want to suggest that unless we were to start looking back and the make HOAG money times that's been taken and when it's been successful and start to kind of run some stats on it, because the way we're doing it, it's sort of a bit of a get long if it goes through the high, get short if it goes through the low.
The low.
One way to filter it would be to okay, well, the order flow for the last hour or so has been to the downside.
Right.
So the odds are going to be better to the short side, but where are we? What's the structure below? Things like that. So that'd be one way to filter it. Another thing, just like this morning, one thing we're seeing a lot of in the ES, and it's just a feel. I haven't gone back and looked at every open, but it just seems like we have such low confidence openings. It doesn't mean that we don't get more confidence as the day goes on.
Mm.
We get so much back and forth through the open. And that lends itself to kind of what we've seen here. It took out the low. I don't know if you got hit to the short side, but
yeah, we're short.
Yeah, so we've got kind of a weak high right now in my book because I have the volume value area low for yesterday at 39.50. So I could see us coming back through there because again we're not seeing a lot of confidence to the downside or to the upside yet. So there we go through that. So
yep.
I got hit. So another way to filter it would be to possibly make the we could just prairie dog this value area low and reverse back through and continue the downside. And one way to filter it would be to maybe do more of a longer opening range, maybe 2 minutes, to give it a chance to sort of play that game where they take out the low and take out the high and then pick a direction. But if we're going to do it within, and again, to do an opening range on a gap, depends how far away the gap is. If it's, really far, well, what I'm trying to say is, if you gap open and do the opening range trade, is there odds that it's going to try to close the gap, based on things you're looking at, or the odds it's going to continue, and then pick that direction and that direction only? Because I've found myself getting chopped up when I'm trying to okay, I'm wrong this way and I'm going to go this way.
Right. Yeah, you cannonball on both sides of it, you just get ripped up.
Yeah. Now, hey, that being said, listen, I fall into every single trap I've ever, learned not to do, I still am susceptible to it.
Of course, aren't we all?
I still can do it, but here we go. We're back to the downside now, and now the short may work, and that can just wreck your confidence for the entire day. Like let's say it continues lower, and man, we were short.
Right.
So I just wanted to offer that when we do the opening range trade, that there's a lot of ways to skin the cat, and maybe we ought to start putting some conditions on it for voting on it. And again, that would maybe lend itself to having a little bit more time to do a pre-market discussion. So that's all I wanted to say.
Thank you, Ben. Thank you. Yeah, there's a lot of ways that we can kind of quantify if and when we're going to take it. A lot of people pay attention to the opening range trade. The more people that pay attention to it, the less likely it is to succeed. Maybe even something like quantifying how often it's been successful in recent history could be part of that equation.
Another thing that I think that we might fall into the trap of is, Make HOAG Money I think we all really enjoy this a lot. And we're all anxious to be in a trade versus maybe waiting.
Right.
I don't think it lends itself to patience
right.
at all.
Yeah, I agree with that. I agree. We find ourselves, kind of looking for trades instead of letting trades come to us.
Yeah, and we want to be in, and I'm with, I'm in on that too. I want to be doing something, but I think that I think the voting can be skewed by that, versus really deciding if it's something we really want to do, because it's sort of a roll of the dice.
Right. Right.
And we want to really discern the odds and have the odds in our favor.
Well, and the idea, and the idea is to have the trade ideas come from the people that are here, right?
Yeah.
So that's we got to watch the chat. We got to have people like you and Rick that are willing to come in and talk. And we had Anne Marie come in and talk and. So it's shouldn't be my trade ideas.
Mm-hmm.
So that's when we get somebody that says, hey, I like this area here. Why don't we think about that and we talk about it, vote, and if we vote yes, then we take it. We could even do, maybe when we start doing it in the afternoon, we do opposite day. We do the opposite of whatever we think we should do, and see how that works. It's. Because I'm confident that if we remain good risk managers, we could be down money in this account for weeks. Eventually, we're going to be okay. Eventually, we're going to make money just through good risk management.
So another I thought about this, I forgot to include, was that we're opening in range below value.
Right.
The order flow has been to the downside, so taking the opening range to the short side was not a terrible idea.
Mm-hmm.
The problem comes that, again, this low confidence thing where they're back and forth, they finally commit to a direction. So one thing I would like to see happen is if we don't change the length of time at all, just not having a stop necessarily on the other side of the opening range. Maybe if there's a structural place or a volume shoulder or something like that to put it on, so you're really risking minimal amount instead of 5 points, because I'm sure some people in here are trading the ES and not just the micro. And then it gives you a chance to, all right, they ran it up, but they're playing the game, now they're coming back through. And maybe, sometimes you try again and it works, like right now it'd be working for us. But I think getting burned on 5+ points, it kind of makes you once bitten, twice shy,
100%. So, just to kind of look at where we are at here, we were looking at these lows here as a potential opportunity. Anne Marie, would you agree that this looks like an interesting area for an execution? She says, I do. thought maybe that would be kind of on your radar.
Sell it against the low of the opening range.
Whoa. Well, we can limit risk by, looking at the halfway back or the high of the opening range.
For the high, yeah.
In a very short time frame. This is not a strong low down here.
Wow.
Pow. So that low, close to those ends of those bottoms of those candle bodies, at the low from Tuesday, couldn't even get to it. That's important information to me. So far, we haven't been able to even get to that level. So she's more inclined to let him punch through that and then come back in. Is that what you're saying, Anne Marie? Oh, I see. You're more inclined to let them punch it out, not get involved too early, I think is what you're saying. Got it. Let's look at the profiles here. We had a pretty prominent overnight point of control here. Bob suggesting we start trading two and take one off on the way. Thank you for commenting on that, Bob.
May I share something for a minute?
Yeah, please go ahead.
Okay, this might be of some value. Let's see. Okay, it's not letting me share for some reason.
Oh, I'm sorry. I didn't know you wanted to show your screen.
Yeah. Let's see here. Okay, this should be showing like four or five panels. And
Yes.
The one I want to bring to attention to. So I've shown this before and talked a little bit about it. This is the volume profile for this contract.
Mm-hmm.
I think it only goes back to 828. Now I will say, disclaimer, it's really tricky during rollover because I use from the start of the contract and I try to go back a little ways and it gets messed up if you do continuous. But one thing to consider, and this is the part I want to share, is that when you have this high volume area, you're looking at basically value. So, when we know the market goes to where there's going to be two-sided trade, and where there's two-sided trade, that's where the price becomes fairer and there's more trade. So even though this isn't a 70% value area per se of like a day's range or something, this is value. So as we get to the edge of value, the downside was limited down here. And once we were rejected out of there, that kind of lets us know that perhaps there's not bigger players that are pushing things out of balance, right? So now we're back up. Now of course we can always get a back and fill, in which we may get in here filling in these divots. But this kind of would explain some of that back and forth this morning, and that might be another thing to look at as far as longer range. Now, if we did thrust through this, And if we're starting to build value down here, we could trade against it, because it's rejecting these former fair prices.
Right.
So that's just something to consider going in to the opening range as well.
So
Or any trading, really.
So now we're coming up to a low volume node here on your contract volume profile. Would you trade against that?
I might. One thing I'm looking at, and this isn't terrible, but if I pull this in, I always talk about market internals, slightly positive.
Mm-hmm.
The tick has been ticking up, but you always get retracements. So, I wouldn't necessarily take a short to take it to the floor, but I might see a move back down to here and continue. So this is where I think the gentleman was talking about trading two contracts, and it'd always be good to take one off here, and you kind of know where your risk is. If it pops out of here, you might be looking at further up.
Mm-hmm.
The purple line is the volume point of control for the entire contract. So it happens to also be, pull this up in here.
And that goes back to what date?
I think only 8/28. I tried to go back further.
Okay.
The contract's longer than that. But
Right. Yeah, there's no volume really in that.
Yeah. So this is the purple and blue here. This is the gray line. This is the volume value area low for the overnight, which often acts as a turning point.
Mm-hmm.
And that happens to coincide right with
That high volume, that low volume node.
Yeah. So that that might have been something, and this fits in, like you had a gentleman asking yesterday in the group coaching, like what's a good strategy and things like this, and you say, well, I trade the profile,
right?
And this fits all those concepts,
right?
So I know that you see these things as well,
right?
And so if that fella's in the room,
hopefully he is.
Yeah, that's kind of the things that. Now, one thing I'm not seeing is, if somebody were to short here, if you're still seeing my screen,
mm-hmm.
now we've got a, let me see if I can we've got a double distribution
mm-hmm.
in volume.
Mm-hmm.
So, you wouldn't want to necessarily risk more than, because it's very thin up here, you wouldn't want to risk more than this
mm-hmm.
high.
Yeah, it limits the risk there, doesn't it?
Yeah. But we have had a very, choppy morning, and it may just slam back down, especially as we get closer to 10 minutes to the new TPO. And as I like to say, imagining how the bars might paint, well, we could open and be up here and keep going up, because we do have a prominent volume point of control.
Uh-huh.
Or are we going to get one of those flushes and then it opens and, we have a more overlapping rotation to the upside, So at this point, though, with this distribution up here, especially if that VPOC moves up to 55, I would want, if the volume point of control moves from here, the purple line, up to here, and we did get a move back down to the edge of this, or even the open,
mm-hmm.
I would want to maybe try a long, for the spring effect. And I heard Anne Marie, I don't remember what she was saying about the candle openings and stuff, but this is a 15-minute candle thing here.
Uh-huh.
I look at these very often. If I was wanting to get long, I would want to get long if it pushed down like a spring, even if it's just for a quick pop of a point or two, because it acts like a spring so often. It takes something to push it through that open, and if you watch that for any period of time, you'll see that, and it's just a behavior that can be exploited. Anyway, I'm talking a little too much.
No, that's good. That's all right. That's good. That's good.
So I'll turn it back over to you.
Got it.
Hey, John, what's your view up?
I have VWAP at 59, let's call it. Just moved above it.
Yeah.
Here it is. It's this gold number right here.
Even with that free fall on CPI, you never really took out the lows from July.
No, or this month.
Yeah.
That I think is important information, right?
That says a lot right there.
Yeah. It does. We've got to remember what doesn't happen is as important as what does. That's why I was really liking those candle bodies, those candle bottoms
Yep.
from yesterday, but we didn't quite get there. And that's important information as well. So we're getting our move up to this point of control up here.
Well, again, that really gives you a nice level to limit your risk at.
Yep. Joe D wants to talk. Joe, I'm going to let you in here. Promote you to panelist. Let's see what Joe's got to say. So what's our next move, Joe? Maybe you just wanted to ask a question.
Oh, now you can hear me, right?
Yeah, I do. Hi, Joe. How are you?
I'm doing fine.
Just-
I just want to make sure I got that special situation idea correct. I have it that we're trading above value area low, regular trading hour
Right.
value area low. So if we hold above here, the next TPO, are we not in the special situation?
Well, typically I much prefer the special situation play if we were to open outside of the range from yesterday and then accept inside value from yesterday.
I got you.
But it doesn't mean it's not going to work.
Right.
So we opened, outside of value, looked lower. We have a degree of excess or rejection down there coming back into the value area. Accepting value at this point gives us the opportunity for a value area special situation play. But I don't think it's as highly probable if we open inside of range and then get into value as it is if we open outside of value and then get into value. But you can see right now it looks as though it's destined to happen.
Okay, another thing before I leave. I watched the internals.
I like what Ann's doing.
Can you hear me?
Yeah.
Yeah, I watched the internals, especially the tick chart, and my bias right now intraday is bullish, based on this move that we're witnessing now.
Got it.
So what I wait for is an extreme correction on the tick chart, and basically I put a Keltner channel on there. Use a 2 or 3, doesn't make any difference, but once it crosses that Keltner channel, that's an extreme tick move, and I will use that as an entry. For instance, if we get a liquidation break, it'll show up on that tick chart or an extreme spike, an extreme 1 minute candle, and then I'll watch that, the low of that candle, for an entry. So I call that a trigger, if you will, and I've had some pretty good luck. And as per the 2 contracts, I have changed my strategy from a 1 to a 2, and what I do is I try to enter near a very, very close swing high or swing low, depending on which way I'm going, and say within 3 points, 2 or 3 points of that swing. After that trigger, and I set my stop on 1 contract just above that. So say I take both contracts will stop me out above that swing, below that swing. But if I get a move in my direction, I have I get out with a 3-point gain, which gives me now I'm in the trade neutral. I'm in the trade and I can't lose, and I let the thing run. If it comes all the way back and stops me out,
So be it.
Even. Yeah.
Understood. Well, Joe, if you see the situation that you were just talking about and you want to show everybody, we'd appreciate that at any time.
Okay. For instance, right now, I'm not getting that signal on my tech chart. Just
Got it.
say I did, and say this move down that we're getting right now
Mm-hmm.
at 9:55 is deeper, and it shows up on the tick chart as an extreme. And what I'll do is the top of that swing is 71 and a quarter, something like that.
Right.
So I'm sorry, I'm going the other way. I'm buying. So my swing would be the bottom of this swing down here at 66. Was it 66?
What time frame? What time frame tick chart are you looking at?
I am my targets are on a larger time frame, but my entries are on a very
Short
micro
time frame.
level. I'm using it anywhere from a 133 tick. And I know that's going to throw you for a loop.
Well, it's gonna be hard.
To a 512 tick. And what that does, that gives me a micro entry near that swing high or low, so that my risk is very limited. So if I'm long here right now, okay, my stop is just below that spike low.
Right here.
I might be getting stopping out. But if it keeps going, what happens is that I get risk neutral with a 3 or 4 point gain, and then the other contract I'm risk neutral on.
All right, I'm going to leave this. This is 133 tick. You said.
133.
All right, I'm going to leave this on here, so we can check it out when when you're looking at a situation. We can see if we can't catch it.
What I'm going to be doing is I'm going to shut up now, and we'll just watch this 133 tick chart. And before we sign off, if we do get an extreme move on,
let me know.
NYSE, I'll speak up.
Awesome.
John, may I share something on the screen? Real
Of
quick?
course. Thank you, Joe.
Thank you.
I like Ann's move.
So there's some information in this, but also it illustrates what I was trying to talk about before. So you can see on this chart right here, we came up to the volume.
Yep.
The overnight.
Mm-hmm.
VPOC stopped and turned around. Okay, so that was also coincided. So that's at 71.5 basically. You can see how that came into this right here, this right in the edge of this. Right?
Yeah.
And so we've come back through now and moving back down. So I didn't suggest it, but I did it myself, but I was gonna suggest a short here because you could risk the overnight high right up here.
Yeah.
Or the volume value area high, and it really thins out here, so give you a chance to get out if it didn't look good. But we're coming into a new TPO, and to address I think it was the last gentleman was talking about the value area or the 80% rule deal. We've almost completed the
almost right.
Move to the other side of value. So I would think it probably will go there, but picking where to get in now, it's a long way back to the value area low, to where you kind of want to get in as close to the value area low as possible. But there's other places I guess to get in. There's a couple of things we got going against us though, is that we have these distributions
right
now. So it rapidly moves through here, builds value. We're building value higher. Basically,
right.
Is
right.
What it's doing. So, and the other thing, and I, on a 10-minute, that's 15-minute. On a 10-minute, and this is sometimes this is helpful to get in on a trend day. We are one time framing up on a 10-minute.
Mm-hmm.
So that's like an under the hood kind of a indication of pretty powerful move to the upside so far. Could just be short covering. But one last thing, a trade idea. On the overnight high, I'm sorry, this is okay. This is in ones. I think it looks the same on the let me just move this in. Sorry for this. Okay. See how we have these 3 swing highs?
Yep.
Here? And even though it's thin up there, to me that tells me why couldn't they get higher? Why was this stopped? Was there a big iceberg or a limit up here that was holding it down? So we have to assume that when we get up here, that they're going to be underwater. This would be something I would be inclined to get in on want to get long into, or a stop entry.
Above.
Very often, this will just pop.
Right.
You know, it's just a thought. You know.
Well, why don't we take a look at that? Let's vote on that. If we take out the overnight high, do we take the long?
Of course, it's safer to get long against it as it comes back down to it.
Right, right. And I'm gonna
we've made a poor high with it at the moment.
Yeah.
So I would do what I call like a slingshot thing, is maybe get long down here on the BPOC, because B was an open drive. That might be an idea, and then risk the bottom of that shoulder in A, possibly.
Here.
Well, you know what? That chart's in ones. If I'm looking at on.
I took back the chart because looks
fine.
like we're gonna take this.
Okay, kind of a fake out so far.
Mm-hmm. So I'm just
What
gonna
do you do, John?
Well, we've got the vote to take the breakout above the overnight high that Ben was just talking about.
You're along?
Yeah, because it's kind of a weak high here. We're looking at the high of the overnight. This wouldn't be a trade for long. But we've stopped right at the overnight high.
You wicked up to it.
Yep.
So one way to enter it is a breakout above it, which it was kind of a fake out, and then to get in like on a retracement down to maybe the A high, or if it builds the volume shoulder in here, I would think you're out by now.
Yeah, we never got in.
Oh, good. Okay.
Yeah, no. I was gonna let it take out the high of the overnight.
You saw Ann shorted it, right? John?
Yeah, I do now. Yeah.
Yeah. The 39.68 area.
Hey, John,
Yes,
this is Joe.
Joe.
We're getting a liquidation break here right now, but it has not hit my 2.2 Kelton channel. When it does, that's my trigger. That's my signal. That's my signal to look for an entry. But this is the kind of liquidation break that I'm talking about. That it's not. It hasn't qualified yet.
Got it.
So I'm getting in at 70, because that spring effect on the BE open. Now, it seems to be more effective, the longer you are into a 15-minute candle, but, I'm taking a shot here and risking in that low volume area below it. So, got a kid in this car.
Little distraction for you.
John, didn't you call yesterday's rally a dead cat bounce?
Well, yeah, I mean, when you look at the daily, and yesterday was just a digestion day, and Margaret was hungover. So Ann's short again now.
Yep. I'd be selling against those highs also.
Went long against the intraday value area high. I think that's and risking that volume shoulder on the bottom of A. I think I think that was just a flush out, and that will probably move higher yet.
So your stop is A. Where are we? We're in B period now, right?
B period.
So you're long?
Are you asking me?
Yeah.
Yeah, I'm long 67.5, and my stop's at 64.5. I could probably go 63.5, but I got stopped out on that last attempt at the B open. So I think I'll just keep it there.
Hey, John,
Yes.
this didn't quite qualify, like I said. It came very, very close.
Okay.
See that dip on the 133, that first dip after it came off the bottom?
Right here.
Around 67 3/4, 68.
Okay, here. Got it.
Okay, it bounced to 69, and then it had a pullback about 50%, retraced about 50% of that little move. That's the area that I would have been getting long, okay? If it qualified, that it didn't qualify, but that's the kind of formation that I would be looking for. To get an entry.
Okay.
A move and a pullback, put in a high and low, and that's where I would enter.
But it still hasn't qualified.
It hasn't qualified yet. No.
Okay. Okay.
Greg Hines wants to speak.
I let him. I brought him in as a panelist. At least I tried. You're in, Greg. There we go. Now he's coming.
Hello, gentlemen. Hey, Mr. Hoag.
What's up, Greg? How are you?
I'm all right. I'm all right. I just have a quick question on a higher time frame note, right? If we look at the 4 hour, right? There's on the 4 hour, I see a level of the candle from.
Here's the 4 hour.
4 hour. We go to September 1st, 10 a.m. candle, right? Because if we draw a horizontal line from there, we get a strong high time frame level, as we can see, has been respected since this downtrend, right? That's 39.20 roughly. I got 39.19.75, so we could say 39.20. So, well, my question to you guys, or as a whole for a trade, what should we do at this level here? Like where should we expect a move from? Do we expect a break? Do we expect a bounce from here? And should we be patient?
Well, I mean, looking at this 4 hour bar, I mean, this was Tuesday. We've put in a base. We've put in a high. So, you know, technically range bound, I'm buying the low and selling the high until it proves wrong.
Correct.
Right? Now, I'm not sure what you're talking about on the September 1st here. This is the 4 o'clock chart, right? Or 4 hour chart. You're looking at this here.
Really trying to get up there. It ain't working.
Greg, if you wanted to share your charts, maybe we'd get a better idea of what you're looking at. But yeah, you know, with this dead cat bounce, we've put in a base here. We've put in a top here. This is a 30-minute chart, but I mean, it really puts in the same highs, same lows. So the idea is, you know, when we're range bound, we fade the extremes. We sell against the high, we buy against the low. A breakout that is accepted, you go with either direction. So looking at your 4 hour chart here, it tells me the same thing. We're in a range, sell it against the highs, buy it against the lows. So we got Anne Marie active here.
One thing I don't like for the long side of things is that, you know, we just don't see a lot of indication there's a bigger time frame involved, and, you know, at this point, it just, you know, that favors sort of a rotation in value. But we'll see.
So Anne Marie, it looks like you are.
I'm trying to see if I can get my screen up. 1 second.
Okay, go ahead.
All right.
Do you let me know when you're ready? I'll hand the keys to you.
No problem.
Anne Marie's still short. You had a target at 68, Anne Marie. It looks like you're there now. Are you taking that?
So she's short at first time, got stopped out, I think.
Yeah, and then she got back in.
Got back in, yeah.
Oh, that's when she took the first half. Okay, still in it then. Nice job.
Yeah, I'm on her side big time.
Uh huh.
So she covered some.
Hmm.
The Dow and the Nas are kind of slipping here.
A lot of buyers trying to hold this 68. She says. For her sake, I hope they fail.
Well, the VPOC did move up to 69. And we did, pretty much early on reject lower prices. I'm just trying to rationalize.
Yeah, of course.
I could just see it could blow that VWAP.
62. We have for the first half hour we had pretty much really good higher volume than yesterday on the New York Stock Exchange, 16% higher. Nice trade, Robert.
Keep making lower highs.
John, yeah. I will do that. Usually like on a daily chart. It's not on this platform, but when there's range bound, I'll sometimes put a box around it just to point it out. Here, you may see it on this.
Barcode.
So I would certainly be considering putting one here.
John, this is Joe.
Joe.
One of the things I watch on the 133, even though my targets are higher time frame, I look at there's a distribution that's being formed up here on that micro chart from 62 to the highs, and we've been rotating around for the last 15, 20 minutes around the developing point of control.
Uh-huh.
Okay, so that's pretty much where we're at right now. What I would love to see is my liquidation break and qualify somewhere around the low of that developing profile. It goes from 62 to the highs. Right there, you also have the RTH point of control. You have my 3-day consolidation point of control. And you also have at around 61 overnight point of control. So I would love to see a liquidation break that would qualify somewhere in that area would be a perfect location.
So back down around like that 62
Yeah, right.
level.
So, yeah. Where I've gotten in trouble is when I get close to my qualification,
Uh-huh.
like which we were up here at the highs, and I jumped the gun instead of exercising patience. I jumped the gun and start anticipating what's going to happen, and that's when I get in trouble. I didn't do it this morning, and good thing, because I would have been stopped out on a loss. So anyway, we're leaving that developing point of control now, and we're heading for the highs, which of course is the other end of that profile. That would be a place where I'd be looking for a short.
And that level is
The highs.
the highs.
Obviously, that micro developing profile is the high of the day. That's the end of that profile. So you go from 62 to 77-ish.
So if we were to add
So
this,
we're leaving the developing point of control now, going to the other side of that profile. That is a good area for me anyway, because it defines my risk. If we leave that profile and go higher, say to the regular trading hour high, I think a low that is, whatever. What's that's telling me is that we're leaving that distribution and going to form a newer distribution at a higher level. So I get out and now it's a new ballgame. Right now I'm playing that distribution that's being formed on this micro chart between 62, 63 and the high of the day 75.
so these lows here, you got some volume here, you got your point of control here. This low volume node is
You're around that developing point of control.
No.
68, 69.
no.
That's the middle. I'm either
Right.
looking for a shot at the high end of that profile or looking for a long around 62, 63.
Down here in this low volume node here.
Yes.
Got it.
But I need my tick chat to trigger me in either way.
May I share something else?
Of course.
Okay. Okay, so this may ultimately not work, but this is a 15-minute TPO chart.
Uh-huh.
Each TPO. So from the beginning, we have the volume point of control right down here at 46.5.
Mm-hmm.
And we have a volume point of control up here at 56.25, then 68.75, now 71. So under the hood, the volume point of control is moving higher.
Right.
So that's a little bit of a. I mean, it may roll back down again. I mean, this doesn't happen immediately, and that's one of the horrible things about trading is we want it now, and it may not happen till like later this afternoon when I quit and hung my head in shame. So here's 10-minute. It's the same thing. You've got the volume point of controls going higher.
Sure.
So, and also I look at the price action. I really don't know how to describe this, but I see like pushes down and then pops up. So it's sort of short covering. And one of the things I'm banking on is that when we get back above the highs, the overnight high, we've got all this potential short covering.
Mm-hmm.
And then we got this prominent BPOC, the purple line way up here.
Mm-hmm.
Anyway, I know these are contrary thoughts to other people's thoughts, but that's what.
But that's what makes these markets.
Yep.
All right.
Okay, that's all I got.
All right. Thank you. And thanks to everybody that's contributing. Thanks for the chat ideas. Anne Marie, everybody. I do have to move on. Greg, sorry you didn't get a chance to talk. I did try to include you as a panelist. Ben, thank you. Joe, thank you. Rick, thank you. We got a lot of good discussion, a lot of good ideas, a lot of things that we probably didn't think about, in our trading. And don't let it confuse. That's one thing that I'm always concerned about is we don't want to start strategy jumping because something worked here one day, and just keep on with your path. And we got one trade in today, which was a small loss. I'm not concerned about that. I know as we get used to and get better at managing this make HOAG money, we're gonna find our ways to get profitable. And so I'm not going to be here tomorrow again, so no forecast, no recap. There will be a recap today. And whoops, hang
It
on.
might trigger.
Thanks, John. Thanks, everybody.
We'll see if it triggers.
Okay, now I'm watching 133.
Boy, it shook everybody out, huh?
Yeah.
Well-
And so the tick chart's gone to
Alert from Google, password required.
shut him up.
Wow. Nice move off those highs. Well, I guess I got some work to do. I gotta do a little bit of reading over the weekend. Here's Anne Marie's book.
You took out the VWAP, John.
And we left that distribution too, so it hasn't triggered.
Plus, you got Paul talking next week. You got all sorts of stuff on.
Yeah, it's FOMC next week too, so
Yeah,
I think that's gonna do a lot to keep us relatively range bound as well.
I think that's gonna scare a lot of longs. Probably scare everybody.
Came right back to the POC of that distribution below.
All right, I gotta run. We'll do this again next Tuesday.
Yeah. Thanks, John. Everybody trade well.
Trade well, everyone. Again, thank you all for joining me and your contributions, and we'll have some fun again next Tuesday.
Over and out.
Trade well, everyone.
Thank you, John.